As we count down to the election, our next guest is laying out the three big market scenarios that could play out based off tomorrow's results. Let's trade the votes with Tom Lee, head of research at Fundstrat Global Advisors. Tom, great to have you with us. Let's start off with the base case scenario, which is a blue wave.
That's right. And heading into Election Day, we're making the assumption that investors are on a buyer strike. So it's been an emotional 2 weeks. Retail investor cash has actually risen, so we know people are just waiting for some certainty. And the base case in our view is a blue wave. It's reflected from the polls and from the betting markets. And while I've heard what you guys have talked about, I think that this results in a 10% rally in equities. So S&P roughly 3,600, because you're going to get a pretty big lift in cyclicals based on fiscal stimulus, the Fed staying easy, and just a relief rally. I think that's offset somewhat by tech, potentially trailing because of the risk of both increased regulation and higher taxes.
Okay, so that's the base case. The other scenario would basically be status quo, correct?
Yes, so I think that the surprise case would be that Trump is reelected and the Senate remains Republican. And the reason it's a surprise is, of course, because the polling markets aren't reflecting this and the betting markets are showing Trump as an underdog. But the reason I think that this is actually a positive surprise, I think the stock market might rally 15 to 17%, so something like S&P 3,700. And the reason for that is we've got the possibility of less regulatory risk, like less regulation creep. We're going to have less risk of lockdowns because of the current administration's approach. And we have the possibility of a tax cut. So I think you're going to get a big cyclical rally, plus tech keeps running, and that extra tech juice is how you get to 3,700 on the S&P.
Okay. And the third scenario is some form of contested election?
Yes. And so a contested election, and I've heard you guys say that it's uncertainty, and I agree it's uncertainty, but it's actually less uncertainty. So incrementally, it's certain because now we're through the election night. And the reason I think you still get a 5 to 7% rally, which is S&P 3,500, is number one, I think Washington goes back to two things. Focus on who's controlling the Senate, but we're also likely to get fiscal stimulus passed before year end. And the Fed is likely going to make some intervention or announce some intervention or prepare to announce intervention if the markets are unstable. So I think the market still gets a lift, and 3,500 is just taking us to sort of that 2 weeks before Election Day.
So basically, all the scenarios that you outlined, Tom, the markets will be higher. Is that right? That doesn't sound right to me. It's win-win-win no matter what.
Yes, and the reason I'm pointing that out is we've gone through an excruciating 2 weeks where the market's lost nearly 10% because nobody rationally was buying equities, but we've had a lot of selling and repositioning. So part of our presumption is we've had a huge imbalance. We've had sellers for 2 weeks. We're down 8%. Cash has risen on the sidelines. As Guy pointed out, the VIX has gone to levels of, very high levels of anxiety. And a drop in the VIX plus moving cash off the sidelines is still going to get us to rally.
So I'm glad you mentioned that because that's sort of my question. I guess, in my opinion, a concession speech either way takes the VIX from today's close of 39 down to the low 30s, if not the high 20s. But have we already priced in with a 39 VIX a contested election? Is that sort of your point? The entire negative scenario is somewhat priced in vis-a-vis the VIX.
I believe so. I mean, I'm going to make an assumption here, but our active institutional equity investors have done a lot of hedging, either in the derivatives markets or the futures. So they have not bet on this 2 weeks being smooth. They bet on a lot of turbulence. So that is going to be repositioning post election. And then on the retail investor side, I think that's why the cash balances have actually been creeping up for the last 3 or 4 weeks. So investors are essentially on the sidelines because they are better prepared for a contested election. So a concession, a clear outcome would be a massive bullish signal.
Tom, great to speak with you. Thanks.
Thanks.
Tom Lee of Fundstrat. And by the way, CNBC will have full team coverage of tomorrow night's election starting at 7 p.m. Eastern and going throughout the entire night, all the way through Squawk Box. So you won't want to miss that. Let's trade this. Tim, I noticed that you were sort of smirking when Tom outlined the three winning scenarios, because every scenario is a winning scenario for the S&P, apparently.
Well, never smirking at Tom. Tom is certainly taking a glass half full approach to three scenarios that you know, I think the market has a lot of anxiety, yes, but the market has reason for a lot of anxiety and a lot of dysfunction and valuations that aren't terribly cheap in an economy that, yeah, I know we had a 32% GDP number and there's a reason why. So, you know, this week we also have a payroll number. We have the Fed. And I think we have other things that the market can focus on, which get us back to some fundamentals. I think the parts of the rally today, so our market conversation, a rebound in housing, I think, is important, and housing-related trades, because I think that is something that continues into the second part. And notice oil. Oil has priced in the fact that basically a blue wave, and yet today it acted very different. I think there's good news in oil, especially on the expectation that the surprise might be something that is not priced into oil.
Shepard Smith here. Thanks for watching CNBC on YouTube.